This podcast is for informational purposes only and does not constitute legal, tax, investment, financial, or other advice. It is not intended to cause or induce breach of an existing agency agreement.
Hello? 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 This is the Vancouver
Commercial
Real Estate Podcast.
And welcome back to the Vancouver Commercial Real Estate Podcast. I'm Cory Wright. And on today's episode, we are joined by the one and only Alan Haigh, founding partner, Impact Commercial Group. Alan's been on the program, feels like a dozen times. We have him or somebody from Impact on several times a year, always talking interest rates. We're always talking mortgages to find out where lenders are going, what are borrowers expecting, what markets and asset classes are people buying it. So we have Alan to join us today. We're getting to the end of January. We're just before ICSC, which is one of the big conferences, if not the big conference in commercial real estate, takes place in Whistler every year. It feels like it kicks our season off to it. So we have Alan on the program today. We're talking everything mortgage related and how we can set ourselves up for 2026, as well as we tap Alan for some of his predictions. So without further ado, guys, let's get to our episode today. Alan Haigh, founding partner, Impact Commercial Group. Enjoy.
This podcast is presented by Impact Commercial.
Impact Commercial, John, Alan, the team over there are fantastic. They've all been on the show.
They have, yeah.
Friends of the show.
Great guys.
Wealth of experience. They can help with all your commercial financing needs.
Whether it's owner-occupiers, land development funds, commercial investments, or multifamily, these guys got you covered.
And they recently obtained their CMHC correspondent lender status.
So for all your commercial lending needs, visit them at impactcommercial.ca.
That's impactcommercial.ca.
Attention realtors, homebuyers, and investors. If you missed out on Atlan at Clayton Crest by Zentera Developments, here's your second chance.
Atlan sold 80% in just 3 months, Adam. And because of that success, Zentera is launching Building 2, Butte.
Located in West Clayton and walking distance to the future SkyTrain station, prices are still low for now, but not for long.
Homeowners across the Lower Mainland are using equity from their current homes to invest in West Clayton, ahead of the SkyTrain and the next market upswing. Because when that SkyTrain is complete and the market rebounds, it'll be too late.
This, Matt, is how wealth is built. Find out why Atlan sold so fast and register now at buttecondos.ca. That's BUTE condos.ca.
All right, we're here today with Alan Haigh, founding partner, Impact Commercial Group. Alan, how you doing?
I am doing fabulous. Cory, how you doing?
Good, thanks. Thanks for joining us again. If you watch SNL, after 5 episodes, they give you a robe. Your 5 episodes. I think you got to be at least 5, maybe 10 joining us here now. So if I had a robe to give you, I would. For all of those listeners, maybe who haven't heard your previous episodes, where we definitely encourage them to go back to listen to find out what has transpired in the mortgage world over this time. Can you maybe let our guests know a little bit more about yourself and Impact Commercial?
Absolutely. Okay. So, Jesus, Cory, I can't remember how many years we've been doing this. It feels like certainly 5 or 6. So I was always pleased that, one of the first guys on here, obviously, being a sponsor, and we've kind of grown our companies together. So which is awesome. But for those listeners who haven't heard me or aren't aware of Impact, is that we are a boutique commercial mortgage brokerage. We focus on BC and Alberta in regards to all the commercial financing needs. So whether or not you're doing a CMHC insured on a multifamily, you're doing land, you're doing office, you're doing industrial, you name it, that's sort of what we help out with. As always, our intention is to be fully just relationship based. So the important part is to just do good work for good clients out there, best service, surround them with the team approach. And you know what? From 10 years ago, when it was just 2 of us, we're now 11, 12, probably going to be 13 in the next little bit. So it's been a great 10 years, and can't wait for the next 10 years.
Amazing, Al. Well, I'm going to plug you here is just as an example of a very happy client for Impact Commercial Group. There is that letter you sent me earlier today. It was $100,000 more in the mortgage amount than we budgeted for, and the interest rate was 15 basis points less than we thought. So it was another happy client here. Signed that letter so fast and got it back to you.
Well, that's good, Ben. We love overachieving where we can.
Al, we have you on the program, or somebody from Impact on the program, at least a couple of times a year to tell us what's going on in the mortgage world that has dramatic impact, obviously, on the commercial real estate side of the business that we're in. With it, it's 2026 here. We're recording this. It's January 21st. We'll date stamp this only because interest rates, bond market moves all the time. This is just before ICSC, which is right around the corner, which is kind of, I would say, the unofficial kickoff to the year in commercial real estate every year. It feels like. Where are interest rates now, bond rates? What's happened? What's going to happen here? Where are we sitting right now with everything on the lending side of the world?
Okay, so the nuts and bolts is for right now is there is a little bit more uncertainty on the interest rate front than we've had probably for a little while now. There's two big issues right now, and one is that the issuance of government debt over the last 5 years, it's been such a massive amount that it is sort of forcing interest rates to go up because there's fewer buyers of it. So we have seen just rates kind of be higher than what we ideally like them to be. There's also, we have, the current leadership of the United States just kind of causing, I guess, the shock and awe in regards to some of these big, bold statements, which just adds further uncertainty within the market, the geopolitics of the situation. And so where it is that these bond markets, which is where we get the pricing up for the mortgages, they trade on a daily basis and they're kind of yo-yoing around, and there's these volatility premiums that are starting to come into the market. So things are, depending on who you ask, is that there is a wide range of potential outcomes for interest rates into the future. And, I'm the first one to admit we deal with some incredibly smart lenders. We have some incredibly smart, clients like yourself who are pretty attuned to where they feel that rates are going. And so where we're at right now is, and apologies if I'm droning on, but the 5-year Government of Canada yields is about 2.88%. And on average, you add 200 basis points or 2% above that. So we get to 4.88%. That's the average kind of a mortgage rate for a 5-year term right now. We are doing some stuff for good clients and good properties lower than that in the low 4s. So that's positive. The aspect of it is some of recent conversations with these smart people that are out there is they are kind of tending towards that rates are not going to come down. If anything that's going to happen is that rates are probably may escalate a little bit due to this uncertainty that's out there. So that's what we're seeing is that potentially rates may escalate a little bit from here. Although, my gut tells me is that rates are going to be, within, 0.2 to 0.4% from where they are right now, for 2026. So that's kind of my line in the sand, so to speak, based on what's available right now.
So you mentioned about the uncertainty in the world, and our really dear friend, Mr. Trump down south there, seems like he's always moving and shaking. Not this country, that country. How much does that play in? Obviously, I get from an economic that it does. How much does that creep into the lender world? How much does his tweets impact us when we're trying to look at borrowing money up here?
Well, it's sort of two parts of that question, and I'll answer is like part one is that the Canadian banking system, our credit unions and our banks, and you got to give credit where credit is due, even though I think that we are way over-regulated, is that the regulators that we kind of deal with, and that's like the BC Financial Services Authority, it's RECA in Calgary, it's the OSFI, Office of Superintendent of Financial Institutions, which governs all the Schedule I banks. They do a really good job of keeping our sort of financial system in check and stable. Like we don't really have a lot of systemic issues, with the strength of our lenders. the issue that kind of comes into it is the world is increasingly connected. And so when borrowing costs kind of go up in one part of the world, they kind of spreads and kind of goes through everything. And whether we like it or not is like we are on the same continent. We might even be the same country as Trump if he gets his way. In the future, that little interesting flag that he showed up with, U.S., Canada, and Greenland. Like it does impact, the government of Canada yields, impacts the Federal Reserve yields, and so we do kind of have issues. So if something changes down in the States, it changes for Canada. Less so going the other way, but again, like it's stuff happens in the States, it happens here.
How much right now, knowing obviously what's happening around, like how much impact on the asset class and the location of that asset class are lenders considering when they're putting forward terms, hopefully eventually commitment letters? How much of that weighs into it versus maybe if it weighed in at all years ago?
I would say it's just like it still weighs into it. Like larger lenders like to do larger loans in larger population centers. So, you look at some of these, the bigger guys, the life insurance companies, the banks, they kind of like to do, large financings in the, say, city of Vancouver or the greater Vancouver area or the Calgarys, the Edmontons, the larger cities. As you get out into the smaller stuff there, we call them secondary markets or, tertiary markets. You kind of get into the more of the credit union guys, that are a little bit more in tune with some of those smaller markets. So, let's just say think of the Vernons, the Lake Countries, the Pentictons. Those are not really the forte of the banks, more of the credit unions and some of our sort of I would say our B plus, A minus type alternative or capital lending groups.
So office obviously hasn't been the most attractive asset class we've been working for the past couple of years. It did feel like towards the end of 2025, there was some larger office transactions down in Vancouver that tend to get a lot of publicity. Are you guys seeing any growth in the office sector with regards to maybe owner occupiers or investors now looking to get into the office market, maybe more so than they were a couple of years ago?
That's a great question, Cory. You may or may not have seen, but it looks like a big institutional investor again has stepped up and put a large office tower downtown. They're firm on it, and so that's again that's the Oceanic Plaza. So you're getting big institutional investors coming in. I can't remember, but what is it? The Post downtown.
Yeah, that's sold.
Quadrille sold to one of the richest guys in the world. From what I understand, it was like an all cash kind of.
Oh, I didn't know you bought it.
I'm going to buy that. So there is increasing strength it's coming back. And you know what? We've had a few lenders, surprisingly, and even in the beginning of 2025, we're already calling bottom, with some of that stuff. So they were starting as of the beginning of 2025. Some of these lenders are coming back in, and obviously the values of these office assets have come down quite appreciably. But when the risk return profile kind of gets a little bit more balanced, and if you can layer in like attractively priced debt, it makes some of those investors look at those returns and go, dang, I might as well do that. So we are expecting 2026 to be a continuation of that, even a strengthening of that. We're expecting more office assets to be sold. We've got a few clients that are hungry for some good office assets in good positions and willing to deploy a lot of money into it. So you're bang on with the office assets. It may still take a year or two for some of those, the vacancy to get evaporate or to lessen. But man, if you can buy an asset that is, as example, like on sale 30-40% from what it would cost to replace, it's a good value bet for some of those guys.
Now, you mentioned that these office assets might be at better deals. Is there cap rates that you're hearing or cap rates that you're seeing across your on the acquisition side that raises your eyebrow?
Another great question here is we're seeing it all over the place. Weaker assets, I can tell you this thing here, the cap rates, are always based on income in place. So nobody is getting really any benefit for vacancy. So if you have, you're buying an office building and there's like 20% vacant, is you get, zero value out of that vacancy. It's only based on the income of what that office building is doing. And so the cap rates on that are still very, very attractive. So we're seeing anything, depending on some of that stuff, we're looking kind of, if I was to call it, is more of like a 5.5 cap is where I would, where I'd probably be on a blended basis. Some of these smaller areas, maybe it goes up from there, but there's still a lot of money that is on the sidelines looking to deploy. You gotta, say you buy a property for 10 million, but its replacement cost is 15. You're getting lenders giving you debt on it at 4.5. Like, it's a compelling acquisition with a potential decent upside in the future.
Now, if we shift our focus to industrial for a second, that's an asset class also that I feel like the past year, 2 years, definitely has come off. The longest time it felt like that was kind of so because you're seeing rapid growth, rapid absorption of Cory Wright on the sales side of the side. Are you guys hearing or seeing it side of things?
It's a slow progress. No, valuations have really come off in regards to land pricing for industrial that we are seeing in basically Vancouver. And you think of Campbell Heights, you think of all these other stuff. So we've seen those land prices come off. We've seen where, say, these strata things, these previously new, BD developed ones where they were selling at $625 a square foot. We're now seeing values down at 5.25, 525, 550, and that's what they're transacting at. So we're seeing this stuff kind of, sort of get into the market. On the other hand, is that we are, actively, and we do a bunch of stuff in Calgary, and Calgary is amazingly resilient. It obviously helps having land costs that are much cheaper than what it is here. Similar style construction costs, but it is, the demand for industrial in Calgary is a lot higher than it is here right now. So that's a positive. So our two main markets that we're seeing a little bit of a divergence between the two, where a little bit more robustness in the Calgary market, less so in Lower Mainland.
You mentioned Calgary there, and I know you guys, from Impact's perspective, you're doing more and more work over there, or probably most likely going to end up in an office over there, I'm sure, at some point. What is your take on the Calgary market? You're seeing deals compression on both sides.
I would just say it's like anything to do with, say, the Alberta market, and mainly, for the two big centers, which is Calgary and Edmonton. But it's more optimism. I don't want to get too political here, but there is a very different awareness level between what is the current provincial governments in BC, which I can probably say is more anti-business, where, the government in the province of Alberta is, pro-business. So, if you're, an individual or a business and you're looking to grow and expand, is, you got to read the tea leaves. Do you want to be, riding that wave, or do you want to be, going into the trough? And so, this is where, Calgary just benefits, Alberta benefits from, a little bit more optimism, pros and cons. It doesn't have the, the gorgeous weather, moderate climate, but it has a lot of other things that, if you're an investor wanting to deploy money into it, you just got more confidence there. So that's why we're seeing more people kind of go there. They're willing to, accept almost similar like yields as it is here. But again, over there, it's just there's a lower risk profile because, a $10 million deal in Vancouver here is like 5 million or 3 million over there. So you just get more bang for your buck over there. It might not be as sexy as some parts in BC, but, again, from an investor, and you have to look at it as like, as one of my old mentors said, is capital is lazy, right? It goes to the place it needs to work the least amount. So it's easier is all I can say. So people are going to where it's easier, and that is not necessarily in BC at this time.
So, Al, are you saying that the NDP government here in the province is not a good government for BC, not business focused? You're the first person I've heard to say that. My God, if I had $1 for every person that told me the NDP was going the wrong direction, Barbados right
Yeah, just like those are conversations over beer. I certainly enjoy some of my conversations with one of the guys. I play a bunch of pickleball with Stephen Curran, who's part of the conservative guys. We've chosen the government, the population of BC, and it kind of is what it is. I do feel sorry for where my kids are going to go in the future because it's going to be really harder, a lot harder for subsequent generations to be able to achieve and afford what they want to do if there's not enough, high paying jobs. So that's basically my thing there.
now. No, I fully agree with you. I think it's a political challenge. This province has probably gone backwards, not forwards. A province like Calgary seems very business focused right now, attracting business, attracting new business, growing night and day. I think out of the Rockies regards. But one thing I'd be really interested to pick your brain on, something that we always have a continuous debate around the office, multifamily. You've seen what's kind of coming across your desk there. It feels like a lot of developers are pivoting strata projects to purpose-built rental projects to keep the pipeline going. The existing multifamily assets that are there. What have you guys seen or experienced in the multifamily lately with regards to finance? Interesting, buying it, looking for.
Okay, so what I can tell you, and this is it in a nutshell, is there is a lot of condo financing. And when I mean condo, I mean stratification and selling of separate units to people who want to live there. Is anything that is concrete construction right now is severely impaired simply because it costs too much to build. When you add in all the municipal costs, soft costs, hard costs, financing costs, it just costs too much. You can't sell them, right, for a profit, and heaven forbid that you make a profit on something here in BC. So that's kind of where we kind of see that. We are seeing niche sort of condo strata, offerings, all wood frame, all smaller kind of things. And I would sort of say it's more of like a prudent risk. So smaller things, sub 60 units, ideally it's kind of like 20 to 30 units where, you can, have them family size. So 3 beds, 2 baths, at grade, no subsurface stuff because it's expensive to go underneath. Those things are still doing pretty good here, right? They can be absorbed, and we're happy with that stuff there. So those things are good. A bunch of these guys that were having a little bit higher density stuff, and they were pivoting to rental. The problem is that we have zero immigration, and we actually have, and I don't know the numbers in there, but I'm not going to be surprised if there's net migration, net interprovincial migration outside of BC into other areas, because there's no good jobs here, or very few good jobs here outside of the limited technology kind of part there, and it's still kind of expensive here. And so this is where they pivoted to the rental. But problem is now rental is getting pinched because there's not enough demand for the rental units that are being produced. So where we're at right now is we've got challenges on the higher density condo. We got challenges on the rental just through like a lack of demand for the spaces. One issue that always kind of comes up is this lack of demand. Like there's lots of demand if your monthly rent is $1,200 or $1,300 or $1,500. The problem is no new product can be delivered and to actually make anything if it's not priced at like $1,700, $1,800. So there's this disconnect on that. So we are seeing new supply of rental kind of be sort of trimmed back. And, we're just recommending our clients be cautious on, deploying into new big construction mortgages, because in for a penny, in for a pound, right? Once you start it, you're compelled to finish it, and you just got to be careful with that. On the other side is just like some of these guys that built over the last 3-4 years, or finished building over the last 3-4 years, is that some of them are underwater. And so you can actually, for some of our well-heeled clients, they're buying existing assets probably 20 to 30% below what it would cost to build them now, getting them at like a 5.25 cap without any construction risk. So for me and our guys, it's like I'd be recommending is just like go out and looking to, don't build, buy somebody else's building at a very attractive pricing right now.
touch base just briefly there. And the big question: how tough is it to get construction or from a borrower standpoint? Sit next to me to show up, say, "Hey, Al, I got like purchase for construction finance."
Yeah, so it's a flight to quality core. So like good quality guys, proven developers, lots of experience. We can pretty much do anything that we have done in the past. It's not an issue. The issue comes up with the lower or lesser experienced guys, the lesser capitalized guys, the higher leverage guys on their land loans that they have right now. It's just that those guys are the tough ones to get get a construction lender on file. And the reason being is just like, some of these guys is like, all right, they've owned the property for 5 years. They've renewed their land loan 3 times already. And you know what? It's their pro formas still don't work. And it's just like, all right, well, nobody's going to give you a new land loan on some of those things because it's just the financials don't make sense. So that's where we're finding in it is when some of these things are working their way through some of the systems, and the cost of servicing some of these existing land loans that are being renewed 3 or 4 times is just going up and up, right? So this is the dumping time of the market where some of these guys they're struggling, and that's just the way it is.
What markets are you seeing deals come across your desk in? By that I mean Nanaimo, Calgary, is it Abbotsford. Where are you guys seeing interest from purchasers, mortgage stocks?
That's a great question.
I'm just getting my pen out. I'm asking for a friend. Go ahead.
Yeah. What I can sort of say is like we're dealing with an increasing number of people. So there's like 12, 13 of us in this office, and everybody has their connections with guys and gals all across BC and Alberta. What I can tell you is that like all the markets are reasonably active. A lot of the markets, let's just say, guys that are good with, northern Vancouver Island, say from Nanaimo up to Courtenay, Campbell River, is like they kind of focus on like kind of adding to their portfolios in that geography. Guys in Victoria, in the Capital Regional District, they're happy to add. They know that market well. They kind of keep going into it. Similar to the Greater Vancouver. Although the Greater Vancouver guys, I will say, is that they're a little bit more sophisticated, a little bit less focused on geography. I would say that their capital is more mobile. And so a bunch of the Vancouver guys are probably going over into the other areas in Alberta more so than, say, the guys and gals that are, spend their time in the interior BC or the Kootenays of BC or northern BC or Vancouver Island. So I can say it's just like it's people are staying closer to home, except for the Vancouver guys, probably much more mobile into, into Alberta.
This is the part of the program, Al, where I ask you to take out your crystal ball. 2026 here. Everything you say is recorded, and we are going to hold you to it. But what does Alan Haigh's crystal ball tell him that 2026 looks like? How do we finish the year up? December 31st, we're having a beer. We're talking about the year that was. How did it look?
Oh Jesus. Like, my honest answer on this is that I think that success is going to be defined on how disciplined you are and how much focus that you place on cash flowing assets, right? So it is like, where we kind of come into it is, the value of a commercial asset is based on the income and the capitalization rate, right? Like it's the formula. It's those guys that are disciplined. They focused on the one thing that they can control, and that's income. That's that discipline to focus on that is going to be what separates, success from the non-success. So my gut tells me is like, I think about 80% of the investors are there that are disciplined and focused on it. And I think those guys are going to get through it. And some of them are going to do really well. Some of them are going to do well. Some of them are going to do average. But there's going to be 20% within the environment that I think they're still holding on to the past. And unfortunately, the past is the past. It ain't coming back. And so you're going to need to, these guys are going to need to write down their equity. They're going to need to, be able to pivot, get some liquidity, sell at losses, get their money back, and try to win going forward into the future. So it's sort of where I think it's going to be. Not to say it's going to be a grind, but I think the guys are going to recover and do well, and then 20% are going to have to make some hard decisions.
Well, you know how the program works. We've got 6 lighthearted questions to ask before you leave. Because you've come on the program so many times, I've had to try to tailor this more to like an Alan Haigh special 6-pack. Do you have a few more minutes to hang out with us?
Absolutely. I'm just going to answer pickleball to all these things here.
There you go. Well, I didn't know you were such a diehard pickleballer. If that's what they call them. It's like I'm amazed how big pickleball is. And I was out at Lougheed Mall in Burnaby there, and I didn't realize the old Safeway is now like some indoor pickleball club. And apparently the parking lot was jammed. And it's insane how big how big pickleball's become now.
Yeah, well, it's just a simple matter, Cora. It's just like, for a lot of us who've got a lot of things on the plate is, man, those hockey games at 9:30, 10 o'clock at night, where you're getting off the rink closer to 12, they just hold, they're less enjoyable as you get a little older. So it's like, you can fit an hour and a half, game of pickleball in so much easier to your schedule than you can, feeling like crap the day after you've played a late hockey game.
First question up. Do you have a New Year's resolution for 2020?
Yeah, I'm actually instituting it. I'm off the sauce. So it is about 45 days off the sauce. And so it's my commitment is to lose 10, 15 pounds. And, I'm about halfway on that goal. So that's my New Year's resolution is to lose a few pounds. You hit your 50 mark and you got to figure out what you want.
Well, that's good. That's good. Well, congratulations. That's not easy to do. So good for you. Next question up. January 21st here. I think I'm throwing you a softball here, but do the Canucks pull it together to make the playoffs?
No.
That was the fastest answer.
Come on. That's the easiest one that could be done. I still love it. It's like you look back and you see what our team was 2-3 years ago, and you do the comparison of getting rid of, like, say, guys like Horvat and JT Miller, and then and Quinn Hughes, and you look at what we got back. It's not a ringing endorsement for the management of the Vancouver Canucks.
No, and I think you look at like guys like Horvat and all these guys. Next question up, Al. What's the over/under the Canucks trade Elias Pettersson before the deadline?
Oh, Jesus. I hope for his sake that he does go. Like, it's he needs a restart. He's something's happening there, and I think he needs just a refresh. So I'm going to say is absolutely. I even think that from you read the tea leaves is that he might be gone by the Olympic break.
Yeah, I'm not going to say that I'm confident he goes ASAP, but I would like to see him go. I think one of, if not probably the worst. And right now, I think you could trade him for a bag of pucks and a roll of white sock tape or a roll of sock tape, and they would be glad. Got to move on. We got to repurpose that money into our rebuild.
Yeah.
Alan, next question up. We've got the Super Bowl not too far down the road. Who wins the Super Bowl in 2026?
I got to say this, and I'm embarrassed to say this, is that after my fantasy league ended during the regular season, I kind of don't even know who's in the Super Bowl right now.
Well, we got Seattle. I think Seattle's still kicking around. They kicked the snot out of the 49ers. I think that game was probably a little more lopsided than people thought, but we still got Seattle in the mix.
Okay, well, let's go with Seattle because, I know their defense is a beast. So it is. Let's go with those guys.
Where's Alan traveling in 2020? When you find the time, where are you going?
I'm heading down to Baja, California, or whatever it is. So I'm going to be traveling around San Jose del Cabo, La Paz, Las Barillas, all that kind of stuff there. It does the body good. I love that desert. So it is going to take 10 days, 12 days or whatever to, kind of, go down there. It's a 4-hour flight. I'm giving I feel like I'm like an info commercial to Cabo. So
I was wondering if you get any commission on this.
Yeah, you know what? I should actually reach out to the Cabo tourism site and say, hey, listen, I'll plug you a little bit and get you some tourism.
All right, second to last question up. What's the over and under that Greenland's part of America before the end of?
Oh, it's not being part of America. So it's whatever, zero.
We'll do a 0 on that one. And now last question up here. Money's limitless to you. Where is Alan Haigh investing in 2026? What market, what asset class? Money's no issue.
Does it have to just be one market?
No. Give us a couple. Let me get my pen ready here, but give me a couple. Go ahead.
Okay, so it sounds kind of it'll be a little bit boring for everybody, but this is the market where I think that you have to be agnostic to the asset class and you have to be like opportunistic. So if you don't have like a rigidity that you either have to be an industrial person or you have to be a retailer, you have to be an office person, I think that there are opportunities in all the asset classes right now. And I think where you go, you gotta figure out is go where, growth is happening. Like, cause where growth is happening, then you're going to ultimately, or you're going to do well. So, my biggest, emphasis is I think that there's more capital, more jobs being created in Alberta. So I'm definitely that whole market from Edmonton to Red Deer to Calgary, a little bit to Lethbridge, but mainly from Edmonton to Calgary. I think it's just a long-term growth market. Why not take a stab at it there? It's not as sexy as it is in Vancouver, but I think the sexiness is just not going to come back for a little while. So I'd be putting probably 50% of the portfolio into, good cash flowing assets in that market there, just because it's so stable. And I really don't see that, there's a lot in the downswing in the near term. For here in BC is like it, these markets, if you got nothing there, is like this purchase of Oceanic Plaza, the purchase of the Post, the purchase of some of these office assets, some of these industrial assets that we're seeing sort of come out there. They're so attractive. They're like 30-40% below what it'll cost to replace. Like, I can go for it, buy a whole bunch of these things if you have it, right? I would say the opportunities we're seeing are more in the industrial right now and the office. Retail is doing so well right now. It's just it's almost fully baked. So there's not as much income to make on it, but the office and the industrial looks really, really attractive. I wouldn't buy land at this time here because you can just the buying somebody else's already built property is just so much better.
So Alan would buy office. Alan would buy industrial if the numbers made sense.
Yes.
It's coming back. Alan, we appreciate taking the time to join us again. How can our listeners find out more about Alan, yourself, your team, Impact Commercial, all of the amazing stuff that you guys are doing over there?
Connect with us on LinkedIn, all the social media stuff. Yeah, reach out to any one of our great staff. One of the coolest things here, similar to you, Cory, is like we're all under one roof. Corporate culture is awesome for us. I can vouch for every single person that's here. And connect with us on our website. Call any of us, that are here. Loop me in. I'm not the hardest guy to find. Just know you're always going to get the honest answers. Always going to get proactivity to help with the financing needs. And we'll do our utmost best to support those guys. I had an amazing amount of support over my 25-year career. This is the great thing about being a founder of a company is we want to try to pass that good karma along to everybody that's in our network.
Amazing, Al. Thank you once again for joining us today and setting us up for 2026 on the in the mortgage world there.
Awesome, Cor. Appreciate it as always. Very blessed, to have you in my life, in our life. Keep doing a great job.
Vice versa, Al. Thanks once again for joining us. We really appreciate it. There you have it, folks. Our episode today with Alan, great friend, great colleague, great guy to know on the mortgage side, Impact Commercial Group. Always a pleasure to have him on the program or somebody from Impact. I always feel like I learn something new every time we have him on there. I'm grateful to hear his predictions, although there's a lot of uncertainty there. It does feel like lenders are looking to lend. And as I alluded to on the program there, we recently just got a mortgage term sheet from a lender that actually was 15 basis points less than our expected interest rate we had in our pro forma, and the mortgage amount was $100,000 more. So the loan to value went up, interest rate went down. Let's see if we can get that deal across the line there. But that, I think, is a good illustration that there is deals to be had out there. Lenders are looking to lend on the right assets with the right borrowers in the right markets. I know from a brokerage standpoint, I talked about this a little bit on the program last week. We had almost a record Q4 in company history. It was so busy. January setting itself up for the same. I think if things kind of keep propelling in this direction, there will be a ton of transactions take place in 2026. I'm not necessarily saying pricing is going to fluctuate a whole lot up or down. That's yet to be seen. That will be very dependent on inventory levels, but the transaction volume, I think, is going to be tremendous in 2026 versus what we saw in 2025. Another great episode coming at you guys next week. Thank you once again for listening. We'll see you guys soon. Take care.
Subscribe today.